But on the 89 range chart, what do we see? Sideways range and a very easy to find price wedge. I mark my lows to lows, I mark my highs to highs, and of course it's called a price wedge. Now a price wedge and a sideways range are very easy patterns. You can see them right there. And they tell me exactly what to do and what not to do. So I use this sideways range, and I used the what we call a wedge. Some people might call it a triangle, okay, but I call it a wedge. There's your wedge right there. Now, there's one more variable here that I want to point out. We had a bear channel, right? Bear channel, falling prices. Now, let's think. What would the highest percentage trade be in a bear channel if I'm going sideways? Any guesses? Sell the highs. Absolutely. It's a bear channel, so now I know inside of this sideways range, if I had to choose between a buy and a sell, I would take the sell order. We also knew that we had the previous high of day up here, we had the previous low of day down here, and we call that what? An inside day. So we were below the highs from yesterday. Well, the highs from yesterday were way up here. We were above the lows from yesterday, and of course that creates an inside day. So we started getting some really big clues here. Price wedge, sideways range, inside day, and of course that bear channel told me look to sell the highs as the higher percentage trade. We begin our day with jobless claims. We always expect to see something here at 8:30, and we began buying those lows because we knew what? It was an inside day. Now again, what does an inside day tell me? Here's some homework for you. Go to my blog, Sideways Markets, and use that search box and type in inside day. And then you'll learn all about what an inside day tells me. Now this is the second time in a row this week we've used this inside day to make some pretty good profits, and you'll want to learn all about it. 8:30 this morning, jobless claims come out. News comes out. To be honest with you guys, I don't care what the news is, to be honest with you. All I care about is what's the reaction to the news. Jobs were rising. We knew that, of course, would be dollar bearish. But in this case, all I was focused on was, I'm at the lows. I want to be a buyer. Inside day tells me nothing's changed from yesterday. Assume the same range is value. And, of course, we'll buy the lows, sell the highs, avoid the breakout. All right? Expect fake out breakouts on an inside day. So here we are, swing high. I'm going to buy these lows here, 8:43, 8:45, right? 10, 15 minutes after the news comes out. It's a two-step pattern long. And of course, at 94.56, I make my 21 ticks. Now, I'm trying to simplify this format for you guys. You can click on this document up top here, guys. Has a very detailed list of all the trades I took. Now, you can actually open up this list of trades right below this video. I'm trying to clean up this chart a little bit here, make it as streamlined as possible for you guys. So if you want to know the exact reason for the trade, the exact targets on it, you can see that that picture, of course, that image will be below the video. So click away. But basically here in the middle, we drop down, swing high, I buy those lows, and at 8:43 I make 21 ticks, 210 USD for the first trade of the day. That was also a fast track winner, which means I gave everybody in the room an easy $100 per tick. I'm sorry, per contract, right, for that entry. So my first trade here, I'm going to buy the lows, right? Inside day, buy the lows. And then, sure enough, we go through 9 o'clock. What's 9 o'clock? 9 o'clock's the open of the pit. We go through the open. We go through the middle, right? This is now the middle of the range. I go through the middle. We go all the way to the highs, and look at this. We begin to see 1, 2, 3, those big wicks of the high right there. That shows signs of failure. We never even got up to the highs. And remember, when we get up to the highs, ideally, I would like to get a test and then come back down. But in this case, we were waiting for a test. Price comes up. We don't get it to keep rising. I tried to sell here for the first one, 913. It's a loss of minus 20 ticks. That's a minus 4 times 5 ticks, right? It's 4 contracts times minus 5, minus 20. I then get right back in, of course, once I saw it try one more time and fail. That time I said, all right, let's take it again. 916 now. I get my 20 ticks right back. So I take a fast track win at the lows. It was a fast track loss at the highs, and then we made it right back at 916. This was an interesting situation because, like I said before, I would rather have price go right through the high, right, fail, and then come down. As you can see here, we get a little bit chopped up there as price stalled at those highs. Tried the first one, right, minus 20, got stopped out. Try the second one dropped 916. I make that money right back. So we end up for a minus $200, and then of course a plus 210, and now of course I'm up by about 22 ticks now. We go right back down into the middle of the range. Now what happened was I thought that this was an interesting situation where we didn't get the test of those highs, and whenever we don't get a test of the highs, it's always a sign of something to come. Either A, if I can't get to the highs, I'm probably going to come tumbling all the way back down. But as you can see, that didn't happen. We stalled right at the BMT. And so at this point, dollar, if you recall, was now falling off the highs, right? 13 range chart falling off the highs. We obviously now too are going to wait through 930, right? The US market open. And then once we see the buyers start to hold here, I'm thinking we're going to go right back and now finally test those highs. So that's why I took this fourth trade of the morning. And you can see it didn't make me any money, obviously. But again, we fail at the highs. We then can't break all the way through. And when we start running back up, it's after the US Open. We get lots of buyers. Dollar has now fallen off those new highs, if you recall, before going sideways this morning. And I'm, of course, going to buy here, expecting to have a retest of these highs. Didn't get anything out of it. Got a plus 5 on it, then a minus 5 on it as it came back down. And at 940, I get nothing out of the deal. So I tried to grab this thing going back into the highs, obviously expecting another attempt to test the highs. It tried, but failed. Now here I am at 945. And I go right back up again. So you can see here, very sloppy, right? Comes up, plus 5, minus 5, bounces me out. I then go up one more time. Now this time I say, remember, all of that weakness we saw right there, inside day, and now the dollar is starting to flatten out. It's a very easy trade now here, getting short. At 950 here, guys, again, inside day, I want to sell those highs. I take a two-step pattern short, 95.29, and again, I make my $200 or my 20 ticks. Now again, don't forget, click on that image below this video and you can see all of the reasons why, all the notes I took are right below the video on all these trades. You can see that snapshots up here, but you can also expand it by clicking on the link below the video.